The mother of short squeezes is coming next week. I'm going to show you at the end of this episode evidence that it is coming. If it is true, if it does come to fruition, that evidence you are going to see at the end of this episode, then the bears will be obliterated. Before I get to that evidence, you will also see SPY futures, weekly, daily, 4-hour, 1-hour charts, and MACD analysis that corroborates that the mother of squeezes is coming. Okay, I'm going to show you corroborating evidence that all point to an extremely bullish setup. All right. We're also going to get into some of the Twitter intraday play-by-play as well. But there were signs this week that, oh, this is bullish. This is not bearish. And what better example is from what you guys know, you current viewers know. Yesterday I called the market maker's bluff. Remember when we had that huge red day? Huge red day. Falling into the close. Kept going down and down and down and down and down. But yet what did I do? On Twitter, in the final hour of trading, I said, you know what? You're bluffing. You're bluffing. I started buying calls yesterday. So, the question I have is not whether I was right or wrong. The better question is true or false? Was the market bluffing? True or false? The answer is true. There is nothing to debate. Why was the answer true? Why is the answer true? That is because, as you see right here at the bottom of your screen, after one of the biggest sell-off days we have had recently, or since December, there was no follow-through sell-off the next day. As a matter of fact, the opposite happened. We closed at session highs. Market maker, you were never going to crash the markets yesterday. You were bluffing. You intend to take the markets higher, and you did exactly that today. You intended to take the markets higher all along. Even while you were bringing the markets down yesterday, scaring the bejesus out of everybody, making everybody bearish, while all along you will be taking the markets higher next week. On this next slide, this is basically a summary of how was it, not only in this morning's episode when I said, you guys, there's bullish divergence here, but during the trading day. You're going to see this in the intraday tweets as well. No, I kept getting calls, buying on the dips. But how? How was it known that actually it was bullish? even though it seemed like, oh crap, here we go again. We're gonna fall. We're gonna go down. Right in here, right. We're going down, 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 down. Oh no, here we go again. Uh-uh. These are the things the market makers cannot hide. They cannot hide these things. Starting with the MACD stayed around the zero line all morning. In fact, it was above it and just slowly went down and down and down. Well, actually all day. It stayed around the zero line. It just did not go down. Market maker can't hide that. RSI never went below 30 ever all day, even when it looked like, holy smacks, we're about to go down. Didn't matter. RSI never went below 30. Okay? I even sent out a tweet. When we were starting to go, it was probably, I think it was probably like this big red candle right here. I sent out a tweet. I don't think I included it, so I'll just verbalize it. I did send out a tweet that I said, get your puts ready. I tweeted that out. But I did not tweet out scale into puts. That's usually what I do. I'll say scale into calls or scaling it into puts. I did not tweet that out. But I did tweet, get your puts ready. Okay? The reason why I didn't tweet that out, because anytime the market start going lower and lower and lower, I start looking left. I start looking left. I start looking, where's the low? Where's the low on the left side? Where's the low? Where's the low? Where's the next low? And I just keep looking. I was like, I don't see the MACD going below zero line, and I don't see RSI going below 30, so I'm just going to wait it out. Kind of like what I did yesterday when I was calling the market maker's bluff in the final hour. I said, you're not going to take this thing lower. Or you're not going to crash this thing. That's really where I was going. It's not that you're not going to take it lower. You're not going to crash. We're not going to plunge to SPY 390, even though that's what you want people to think. Okay? So, all of the back tests to the EMA 50 and the SMA 20 were done with wicks up. That's strength. You'll see that in the next slide too. This is a little bit blurry. But wick up, just with the exception of this one. Wick up, wick up, wick up, wick up. Time after time. I was like, That's strength. That's hidden strength when you're doing that. If all of these were more like wicks down and a big huge red body candle was straddling the line, okay, that's weakness. The markets were already giving tells of strength, hidden bullishness. They were doing it. Okay? At opening bell, immediately back tested the EMA 50 right here. Well, actually right here. Okay? After a huge red day, you went straight for the 408 channel resistance. That's right up here. Right here. Here's the dash. After a huge red day and falling right here, you see that? It's still falling in pre-markets. But despite that, boom, you rocketed straight up there. You not only that, you back tested this with a wick up. I was like, ooh, that's strength here. There's power here. You don't wick up when you're weak. Like this. Like look at this. This is pre-markets. Down, 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 down. Show me anywhere in the pre-markets where there's wicks up. Nowhere. Nowhere. Until well, this was supposed to be a green wick. If you saw my earlier AM episode, and you're going to see this slide later on in the presentation, this was a green wick. It's red, obviously, duh. But I have evidence that it was other evidence, corroborating evidence is green. That's why I had to check other sources like Yahoo. Okay. But as soon as I saw wick up, back test, rocket, I was like, ooh, this is not weak. That's strength. That's bullish. Okay. Even when rejected at 408 the first time, which is right here, it still wicked up and back tested the EMA 50. Okay, here's the rejection. Right here. Came down, back test, wick up, went up again. I was like, man, that's not weak. Okay? So these are signs you can look for that there's hidden strength. Okay? Any move down was controlled, stair-stepped. It wasn't just boom, 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 down. No. It was kind of like, wick up. Okay, let's just kind of meander down here. Oh, fall a little bit, meander. It was very slow. You could just watch it. It wasn't fast motion at all. It was very slow motion stair step. Okay, that's another sign that's there's strength, that this is controlled. Okay, markets took back the EMA 50 in pre-markets. That shows strength right here, right here. Took back the EMA after the thunderbolt, after the green thunderbolt that you're going to see in another slide. After the green thunderbolt, boom, 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 boom. I was like, uh-huh. What's up with that? Right here. This was evidence of hidden strength. That all of a sudden, you just, boom, rocket up there like that. You rocket up to 408 at opening bell. Uh-huh. That's not weak. Okay? So, let's get a little bit into the intraday stuff. Yeah, so it's, this is obviously clearer. So, and as you'll note here, and you're going to see more of this a little bit later, markets kept going up in extended hours, guys. So basically, this is just an uptrend that's going to go up, and on Sunday night futures, we're going to see what's up. It's going to retake this channel. It's going to do something, okay? Ooh, let's just start off with this, shall we, guys? This week was the bear, wear, and tear week. Monday was an up day, when everyone was thinking, including myself, that perhaps it's going to be a down day. Because remember, the Friday last week, the previous week, I did an episode that said, yeah, I think a pullback's coming. We're due for that. But nope, Monday was an up day. Not good for the bears. Hoping, thinking a pullback was coming. And then what happened Tuesday? You all know what happened, J. Powell. The pump, dump, and pump. Crazy wild swings intraday. Bull trap, bear trap, give it back to the bulls at the end of the day. And then what happened on Wednesday? Kind of just stair stepped and fell, lost the channel, kind of fell all day long into the close. So you bears who got puts on Wednesday woke up in the morning, got trapped by a huge gap up. SPY went from 410 for the previous close to 414. So you got trapped, or you would have got stopped out at opening bell. If you were day trading holding that over, you would have been down big time because of that gap, right? On Thursday, yesterday morning, when that opening bell came, you would have had no idea that we would have had a huge red day, but you wouldn't have known that at the time. You would have panic sell. Oh my God, I'm out. Or your stop losses would have triggered because it's too big of a, that's a huge jump. Way more than like 10%, right? Whatever you set your stop loss to. Okay, so that was Thursday. So even if you were rewarded because yesterday was a huge red day, you bought puts down low, didn't you? I bet you bought some puts down there because everyone, 98% of the traders were freaking out. Freaking out that we're going to crash. Except me, I'm over there playing poker with Market Maker, calling his bluff. Only to wake up this morning, Friday, to be met with session highs. You would have been trapped every day this week, the Bears. And next week, it's going to get worse. Okay? So, just a couple things. I said this, this was 8:42 a.m., 12 minutes after opening bell. I included this because little did I know, boy, the market makers sure did one hell of a job with that wedge. It was a wedge within a wedge. So I sent out this tweet, kind of um, alerting everyone of what kind of formation they can do. They can either do a back test, meaning a back test, which they did. They did a back test right here, came up, came back down, back tested, went up. Okay, so they did the back test. But I also said, yeah, they can also do a wedge. Oh boy, did they. Check this out. This is just a bigger blow up. It was a wedge within a wedge, guys. So first I was tracking to this dotted line wedge. See that? See the dotted line wedge? That's easy to see. But actually, this was a wedge inside of a larger falling wedge. That's what the true formation it was going for was. But of course, at this moment in time, you can't see the bigger wedge, obviously, because you don't have enough data points. So what this looks like at this moment is like, oh crap, it fell out of the wedge. Get your puts. See that? You see that now? It looks like it's falling out of the wedge. But but actually it's just a bigger wedge that's descending, and you guys know descending wedges are bullish. Because what happened after that? Boom, see you later. Okay? So that's that. That one was a tough one because that one got me. But see, at the moment, at this time, you can't see the broader wedge because you don't have this data point yet. You see what I mean? You don't have it. So, yeah. So this one, I'm going to give this one to the market maker. That's clever. That's clever. But I'm going to remember this next time. Next time I see a wedge, and next time I see you falling out of it, if I start to see other clues that you've been waking up, I'm not going to bite down on that. I didn't bite down on this. All I did was as soon as it started to fall out of this wedge, like right here, this big red candle, that's when I sent that tweet out. I said, get your puts ready, guys. Get your puts ready. But that's when I didn't freak out. I just said, you know what? I'm going to start looking left. Where's the lower low at? It's like, no, you know what? We're not there yet. See what I mean? It's like, no, we're not there yet. So I held off. I was like, nah, I still think this is bullish. Okay? So, oh, we're just going back to this. Actually, I got some longs. I scaled some longs right here when I saw this. This would have been this candle right there. Yeah, this one. This one right here. So, got some longs right there. Okay? I did not scalp this move. I held on to it all day. Okay? So, I didn't scalp this. Probably could have, but I didn't do it. Okay? Okay, yeah, here's where I realized the bigger wedge. So, I I would say it's actually impossible for anyone to have seen the bigger wedge. You could only see the smaller wedge. You could not see the bigger wedge until this data point is created. That's when I saw it. I mean, I saw it before I, drew this out, but yeah. Okay. Okay. This is just generally important to mention. That's why it's important to, you gotta draw these lines out, guys. You gotta draw them. These channel lines, like this blue one right here, because I call it out. It's 100% respecting the blue 40640 channel line. All morning it's oscillating around it, including right now to find support on it. That would have been right here. Oh no, right, yeah, right here, when I took the screenshot. All morning and all day long, finding support on this blue channel line. Finding support on here so that it can consolidate under the channel, the red channel line. Consolidating under the line is bullish. It's bullish. Okay, I just basically skipped to the end. Forget about the whole day. It's the final 10 minutes where the action's at. Oh, yeah. Just boom, and then boom, boom, boom. Yeah. I was just shaking my head. Just shaking my head. Okay. So, why don't we move on to SPY futures? Here's the corroborating evidence before I actually get to the real evidence of the mother of short squeezes is coming. You guys, despite that huge red day yesterday, huge red day, look how we closed the week. Wick up, not even touching the EMA 50. That is bullish. Remember, you guys always hear me talk about you got to backtest, you got to backtest EMA 50, you got to backtest EMA 50. It didn't even touch it. That's extremely bullish. And you have wicks up. You have wicks down too, but you have wicks up. Something is keeping it up. Last week I was like, oh yeah. I was thinking to myself, I'm like, oh yeah, we're gonna come back and test this EMA 50 line right here. Oh, we're gonna come back and do it for this week. I was like, oh yeah. Well, it's natural, right? It's natural. We didn't. That's bullish. Okay. And look at the MACD. It's still, now it's way past the zero line. It's still fully like going parallel with the signal line. That's bullish. Okay. This is the weekly. Let's go to the daily. You guys have heard me or seen my tweets. Anytime you are backtesting against the SMA 20 and don't even bother this is the daily, don't even bother backtesting the EMA 50. Instead, you're backtesting and then wicking up on the SMA 20 on the daily. That's bullish. That's bullish. Notice this was the big red day. This big red day didn't even touch the SMA 20 on the daily. Okay? Now, here's the MACD. It does have a slight negative cross. But look where it's currently at. 49. That's crazy up there. And what you're going to see in the next slide is the 4 hour, which is essentially the half day. This is the daily, so 1 day. Once the 4 hour starts to flatten out and curl out, guess what, guys? So does this. Right? So does this. So I know out there on the internet, on YouTube, they say, oh, MACD negative cross, MACD negative cross, MACD negative cross. It's not the fact that it's a negative cross. It's what happens on the lower time frames that will flatten out the daily. And it's where does the negative cross happen? The negative cross happens, in this case, way above the zero line. For you to go, like, make the next leg lower, like you're going down, you have to do a negative cross below the zero line. Kind of like this. This was December. Yeah, January 2023. December, yeah, big time negative cross, big time below the zero line. And yeah, we went down, didn't we? You all know what happened the last 2 weeks of December. That's what I'm talking about. That's what I'm talking about right here. Way below the zero line and negative cross. You're way above the zero line and you barely crossed. And on top of that, you're back testing against the SMA 20 with a huge wick up today. That's not bearish, guys. Okay? Look at the 4 hour. Okay, so this is from yesterday. See that? Down, 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 down. But guess what? The natural reaction is always going to be. You lost the EMA 50. Here's the red line. You lost the EMA 50. Oh, you're going to backtest it. That's what it's doing. 1 candle, 2 candles. There's going to be a third and a fourth and a fifth. It's going to backtest against the EMA 50. It's going to come back up. So these 2 green candles were from today. What do you think Monday's going to do? Well, of course Monday's going to come back up and up. It's going to come back and backtest it. That's the natural response. That's just the way it works. Okay? So, and guess what? The 4 hour is flattened out and now it's starting to curl up. This is below, this is at the negative 12.9 range. Guess what the bear line for the 4 hour futures is? Negative 35. Nowhere near the bear line. Nowhere near the bear line to make the next leg lower. And it's already curling up at the negative 12 line. Okay, you got to keep, yeah, here, I talk about it right here. Yep, negative 35. You're not there. Okay, let's check out the 1 hour. Okay, here we go. This is a good example of what I said, what you saw in the previous slide. So down, 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 down. But guess what? It's going to backtest. It come up, 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 and then try to retake it. That's what the 4 hour is going to do. It's not quite there yet. You saw that a moment ago. You only saw 2 candles a moment ago. That there was still, it was only like right here. It still needs, it needs a little bit more to go to even try to backtest this line on the 4 hour. Look at the 1 hour, MACD. Separated from the signal line, and it's rocketing back to the zero line. This was as of close on Friday. What do you think is going to happen Sunday night? Even if Sunday night's a little bit down or flattish, it doesn't matter. By the time we wake up on Monday morning, that bad boy is going to be close or at the zero line. Its target is the EMA 50 line right here. And it fully intends on reclaiming it on the hourly chart. And that's bullish. Okay? Look at all these wicks up, 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 up. That's not bearish at all. And now we're going to finally get to evidence of the mother of squeezes. So, I just showed you all the corroborating evidence, weekly, daily, 4 hour, 1 hour. Remember this morning's episode, I showed you guys these, well, these are green wicks. Green wick, wick, big wick. All green candles, right? Okay, so you got that visual in your mind. These are, okay, you got these visuals. Let me show you something from February 2nd. Look at this. Wick up, wick up, wick up, wick up. Wick up, wick up. And then what happened that day? Boom, 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 boom. Right? It went up. Okay? Just look at the, if anything, just look at the exponential moving average line, EMA lines right here. It went up, 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 up. Okay, so you got that visual in your mind? Are you ready for this? So, okay, before I show you. Basically, all I've ever seen and all I've ever presented in my episodes are wicks, right? Like what you see right here. You know, wicks. Would you like to see what happened at 4:50 p.m. Eastern Time? Oh, yeah, Central Time. Central Time in extended hours today? Not only did we have a wick up, like what you see here, we have a giant green candle, not a wick, candle up. Not a wick, candle. Full body candle. Look what it did to the MACD. Straight up. And guess where that green candle stopped? SPY 430. The August 16th peak close was 429. Coincidence? So I want you to let that sink in for a minute. All I've ever seen were wicks before. So I was stunned when I saw this huge green candle. They're priming the system for something. And it's not for like next month. It's got to be for next week. Okay, so there you have it. You saw the corroborating evidence of the weekly, daily, 4-hour, 1-hour SPY futures. Not even SPY, futures. And now you're looking at SPY. They're going to do something. If this were to come to fruition next week, I will say this though, and I said this in yesterday's episode. Well, I alluded to it. If we move too far, too fast from the mean, you can expect a dump. If it's too far, too fast, I would expect a dump. Okay? That's just natural. So it depends on how all this plays out. Okay? So that's what I want to do. Share with you guys tonight. Get ready for next week. You know, you don't have to take my word for it. If you do firmly believe we are going to crash, you're more than welcome to buy puts. I'd love to know. Please leave a comment if you do. You know, so please follow me on Twitter where I give real-time tweets intraday as I call the action. It's important to listen to your favorite music while you are trading. It helps you get into the right state of mind, achieve your flow state. Please give this video a like, share, subscribe, or click to be notified when I release something new. I'm Agent 000, signing off.